And next up is a conversation with Christine Lagarde, president of the European Central Bank, moderated by Francine Lacqua, anchor of Bloomberg Television.
What a great pleasure to be here with Christine Lagarde, the president of the European Central Bank, and welcome, President, to the New Economy Forum. Bloomberg. I have to start where everyone is talking about the vaccine. How will it actually change your forecast, and how will it change this economy if we do get a working vaccine early next year?
Well, it's lovely to see you, Francine, and to participate. To your question, I'm not sure that it's going to be a major game changer for our forecast, simply because what we had anticipated in our baseline was that at some stage in the first half of 2021, there would be a vaccine and that it would be rolled out in the course of 2021. So it might be a little bit accelerated, given the news that we're receiving from the various horizons, Germany, US. But I don't think that it's going to be a game changer, so to speak. I think that our forecast is being revisited almost as we speak, and we will be releasing on the 10th of December. So I don't want to anticipate what the outcome will be. But, we've seen, before we had this great news about vaccines, we had some pretty negative news concerning the second wave that really came about, certainly earlier than anything we had anticipated. And together with that second wave, we have also that list of containment measures and lockdown measures that have affected one country after the other in the euro area. So we had a combination of those sort of developments that affected negatively the situation, and that also has an impact on the outlook.
So what kind of economy do you see for Europe and the world because of the extra restrictions? Is it, a double dip? Is it something that is so uncertain at the moment because even if we get a vaccine, we don't exactly know what shape it will take or how consumers will behave?
I don't want to downplay the very good news that the vaccines were, but I think that, as a central bank, we have to be mindful of not just the short term and the news impact. We have to be mindful of the overall situation. And in that vein, I think that the second wave that we saw presents risks. The first risk that I would think of is the fact that consumers, investors, employers do not regard the pandemic as a one-off, this V-shape that we all aspired to, but as something that will recur over the course of time, and as a result would lead them to completely change their behavior. In other words, how about if they start saving again for precautionary purposes? How about if they continue to freeze and hold their investment plans because of the uncertainty generated by this situation? And the second risk that I see is the potential real/financial spillover, which we have managed to avoid so far. So in other words, we have not had the financial sector amplifying the downside that has weighed on the real economy, and we need to really stay clear of that because that would be an aggravating factor.
What surprised you the most in the economy in Europe, but also worldwide, given the pandemic? Is it wages? Is it productivity? Is it how quickly people actually started working again when some of these lockdowns were lifted?
What surprised me most from this part of the world where I have relocated is, how in the face of this massive, exogenous, symmetric shock, all European players, upped their game. And I think that we were first out of the gate, putting together a very large package in the first half of March. And we were soon followed by the European Commission, the decision to apply the escape clause, the decision to remove the state aid restrictions, the decision then to put on the table a massive package that was agreed in July. That surprised me because I had gone through a lot of procrastination and laborious process back 10 years ago. And the speed at which we moved certainly surprised me. And that was a strong encouragement in working together, which we did.
President Lagarde, you've been pretty blunt about using asset purchases, but also long-term loans. And this would be to provide stimulus in December. Which is your preferred tool?
You know, back in March, we decided to actually use two key tools. One that was specially designed for the exceptional circumstances that started hitting us, and that was the pandemic emergency purchase program. And the second one, which was not as innovative, because there had been longer term refinancing operations, but certainly we changed the terms. We focused particularly on making sure that the credit channels would stay open and would continue to flow credit to the economy. So we had those two tools that were intended, first of all, to make sure that we would stabilize financing and that we would make sure that credit was stable. And the second, which was really intended to put liquidity and to make sure that it was largely available for the for the entrepreneurs, for the households, and that would sustain the economy despite the heavy shock. So those were the key tools, added with relaxation on the collateral front in order to have an enlarged pool of collateral to draw from. Those tools were extremely helpful and came on the back of an existing situation, which all you listeners, I'm sure, know better. Now, clearly, going forward, as we have indicated after the last Monetary Policy Governing Council, we will be prepared to recalibrate in order to face the situation and the second wave. And I have indicated last week that just as PEP and TLTROs, which are the two tools that I have just described, had been efficient in mid-March and then later on in June when we recalibrated PEP and increased its volume and extended its maturity, that those tools would be certainly regarded as essential, but that everything would be debated, and this recalibration and this dynamic recalibration would be discussed in the Governing Council.
So, President, given what you just said and also your speeches in the past, because the duration of the support is so important, does it mean, is it your way of signaling basically that there could be stimulus extended for longer than the market currently expects?
Francine, I think what is really important is that we make sure that the financing conditions are stable, are conducive to economic recovery as it comes, and that economic operators not only know that the level of financing is going to be there, but that it will be available for a period of time that will last long enough to actually cover the period during which the pandemic and the various waves will affect the economy. And as we are likely to foresee that second wave affecting the economy well into 2021, we will be looking at all these options, which have to do with levels, which have to do with duration, and which will take into account the specific benefits of the tools that we have and that we have used to good effect under the exceptional circumstances that we faced in March and that we are still facing today.
Last week, you gave a pretty powerful speech about coordination between monetary policy and fiscal policy. How confident are you that the message was received and actually a lot more can be done?
I think what has really been extraordinary during that crisis since March is how fiscal actually operated fast and big and focused. And I think what is remarkable is that the first package of 540 billions was rapidly agreed and has already been rolled out. And I'm here referring to the SURE pillar of that first set of supports that were agreed by the European Council, and how this additional one, the Next Generation EU, which combines, clearly the MFF for a period of years, and then the Recovery and Resilience Fund that will also be effective for a period of time. How that actually was combined together with the monetary support that our monetary policy provided. And it's not a question of one leading over the other or who was first off the gate, but it's a question of how we were capable of supporting on the monetary front, and how fiscal was able to give a very strong message. And the joint borrowing is a clear, strong message that Europe is together on that, and that the fiscal arm can actually operate in a much more targeted and much more efficient way in that regard, given that the recovery was anything but solid, consistent, and even. It was uneven, it was fragmented, it was incomplete. And the fiscal arm in that regard is clearly operating to better effect than the monetary arm, which has to be around and supportive, though.
Madame Lagarde, you've been in charge for just over a year, and in that we've had a pandemic. I mean, we've had quite a lot going on. What surprised you the most about the European economy or European institutions trying to come together to actually find a solution?
There are certain things that didn't change. I would say the long nights, to a degree, the laborious process that it takes. But what surprised me was, nonetheless, the efficiency that was developed amongst 27 member states with 27 sovereignty, and this sort of understanding that we had to face the situation all together. There were some, hiccups in the early days, but frankly, that was overcome on all fronts. And I think that the sort of coming together of Europe at that point in time was, in my view, exceptional.
Does climate reporting for companies actually be mandatory?
Sorry, I missed the beginning of what you said.
So I was going to ask about climate change. I know you've been one of the biggest proponents of sustainability and trying to, get companies to do better. But does disclosure have to be mandatory if we're going to see real change?
This is a personal position, not the ECB, but I think disclosure should indeed be mandatory. And I'm very, very pleased to see how progress is being made in terms of reporting requirements, in terms of harmonization of principles, the way in which the IFRS is coming on board, the way in which the accounting firms are moving along, and the NGFS, which is this network for the greening of finance, which is a club of central banks in many ways, is also largely involved in that respect. And I'm really pleased that the chair of that network is actually going to join the executive board of the ECB as early as January 1st. So it will certainly reinforce, our capacity to analyze and to mobilize us to see where, with our objective of price stability, we can actually include the climate change imperatives in both how we measure price and inflation, how we define the room that we have depending on where the natural interest rate is moving as a result of climate change, and how we can better analyze the situation as a result of the climate change impact.
Do you think that climate change, yeah, but actually it's being done at quite a rapid pace. Is this the good thing that comes out of the COVID pandemic, that actually a lot more has been done on green sustainability?
I think in many ways the COVID-19 has accelerated trends that were there, that were latent or that were slow moving. And certainly the momentum about climate change, the impact it has, the imperative to participate in whichever capacity and within the remit of our respective mandates, that has been accelerated. I have no doubt about it. And in a way, that's a blessing in disguise.
Do you think that the mandate for central banks to only focus on inflation is now too narrow, given everything that's happening around us?
Well, our mandate here at the ECB is not inflation, it's price stability. And I think that we have to be smart about the components that go into price stability and how we define inflation, how we analyze the situation, how we determine the room that we have to maneuver. So all of that requires that we have a larger horizon than simply looking at harmonized index consumer prices. Clearly, that could be a measurement. That might be the measurement. It's something that we will be debating as part of our strategy review. But price stability comprises a lot more than just that. And I hope we can explore all that as part of our strategy review in the weeks to come.
What's your central expectation for 2021? Are things going to get better? Maybe multilateralism is back. Maybe U.S.-China, the relations get a little bit better, or is there a danger of a second wave getting bigger, a third wave? It seems that it's very binary at the moment. How do you view the world?
If I would suspect that we will have a little less uncertainty than what we had in 2020. I would hope that progress, technology, biotechnologies, discoveries are going to help going forward. But I still believe that 2021 is going to be a difficult, certainly first half of the year, and that we will not have caught up with where we were pre-pandemic before the end of the year.
Christine Lagarde, thank you so much for joining us today. That was, of course, the president of the European Central Bank.